What if your education and work experience actually mattered more than your credit score when you went to apply for a loan?
Interesting.
That's the big idea, right? Behind Upstart Holdings, this company that's using AI,
Ah,
and they want to like reshape the entire lending industry.
yeah,
Make sure to hit that subscribe button so you don't miss any future deep dives like this one.
absolutely.
Today, we're going to take a deep dive into Upstart Holdings, Inc., going way beyond just what the headlines say.
Okay.
And we've got a whole bunch of research reports, articles, and we're going to try to extract the juiciest insights.
Yeah, it's a really fascinating case study, especially thinking about everything going on in the financial landscape right now.
Absolutely. I totally agree.
Yeah,
Let's just start by getting a good understanding of their business model.
sure.
They're described as this AI lending platform,
Yeah.
but it doesn't sound like they actually lend out the money themselves, right?
You're right. They don't lend the money.
Okay.
They partner with banks and credit unions. So they're kind of like a bridge between these traditional lenders and potential borrowers.
Gotcha.
And I think their core innovation is they use AI to analyze what they call unconventional data points,
Uh-huh.
like your education, your job history, to assess creditworthiness.
So instead of relying solely on like the traditional credit scores,
Right.
they're kind of trying to paint a more complete picture.
A more holistic picture
Yeah.
of a borrower's potential, their financial potential.
Exactly.
Yeah.
And I think it's really interesting that they started with income share agreements or ISAs,
Yeah.
but then they shifted focus to the personal loan market back in 2014.
That pivot seems to have been a key moment for them,
Yeah.
to put them on this trajectory.
Huh.
Their revenue model is based on fees they collect from those lending partners for every successful loan referral.
Okay.
So it's a model that aligns their incentives with their partners because they both benefit from more approved loans.
Yeah, that makes a lot of sense. It makes you wonder, though, like how does this approach scale in a competitive market?
That's the real crucial question.
Yeah.
The AI lending market is projected to be $90 billion.
Wow.
By 2033, it's massive.
That's huge.
It's attracting tons of attention, lots of investment.
Yeah.
But it also means Upstart is up against some really established companies,
Yeah,
players like SoFi, Lending Club.
of course.
And then you have to think about the traditional banking giants.
Yeah.
And they are incorporating AI into their operations now as well.
Yeah, so that's a lot of competition to kind of figure out how to deal with.
It's a crowded space.
Yeah, definitely.
Yeah.
Are there any other potential like challenges that you see for Upstart on the horizon?
Well, one of the big risk factors is the regulatory landscape.
Okay.
Some of Upstart's key lending partners are currently under regulatory scrutiny.
Oh, I see.
So any disruption to those partnerships would significantly impact their business.
That makes sense. If they lose those partners,
Yeah.
that would be a big problem.
Yeah, big time.
Okay, so let's shift gears a little bit and talk about the team that's actually steering this ship.
Sure.
What stands out about Upstart's management to you?
Well, they've got a blend of experience from tech and finance.
Uh-huh.
The CEO, Dave Girouard, has a background as a Google executive, which is pretty noteworthy.
Yeah.
His experience in scaling tech companies could be invaluable as Upstart navigates this rapidly growing market.
It's a fast-paced world.
Absolutely.
Yeah, so is the leadership team taking any steps to kind of adapt and stay ahead of the curve?
Oh, yeah. They are making strategic moves on several fronts.
Okay.
They're investing heavily in further developing their AI capabilities, which is what makes them different, right?
Yeah.
It's their core differentiator.
Yeah, their secret sauce.
Exactly. And they're also diversifying their offerings beyond just personal loans.
Oh, interesting.
So they're exploring auto loans, home equity lines of credit, also known as HLOPs, and even venturing into small dollar loans.
So diversifying in a bunch of different ways.
Yeah, hedging their bets a little bit.
Yeah, that makes a lot of sense. What about their approach to funding those loans?
Right.
I understand they're trying to, like, reduce their reliance on their own balance sheet.
They are.
Oh, they're
That's
great.
right.
Okay.
They're transitioning to rely more on partnerships and capital markets programs for funding.
That's right.
This move could provide more stability and flexibility as they scale.
Yeah.
It also signals their intention to build a business model that's less susceptible to the ups and downs of the market.
Those are crucial considerations.
They are.
Especially when we look at Upstart's financial track record,
Yeah.
which, from what I've read, it's been a bit of a roller coaster ride.
You could say that.
Yeah.
Their financial performance has mirrored, really, the turbulence of the broader economy. They experienced some really impressive revenue growth in 2021,
Okay.
fueled by low interest rates and high demand for loans.
So things were good.
Things were good.
Yeah.
But then interest rates climbed in 2023, and revenue took a hit.
Yeah, we've kind of seen that across the board in a lot of different industries.
Absolutely.
Okay.
Pattern.
Uh-huh.
Yeah.
Are there any signs of a rebound for Upstart?
Early indicators for 2024 suggest they are on the path to recovery.
Okay.
Revenue growth is picking back up.
Okay, that's good. So they're showing some resilience?
Yeah, some resilience.
Now for the million-dollar question. Profitability.
Right.
Are they making money?
Well, they did achieve profitability in 2021,
Okay.
which is impressive for a relatively young company in a dynamic market.
For sure.
However, they've been reporting losses since 2022.
Okay.
This shift is likely a result of the challenging economic environment, but it's something investors are watching closely,
It's a good reminder that growth doesn't always translate to profit.
especially in a volatile market.
Exactly.
Yeah.
What else should we be paying attention to when we're thinking about Upstart's financial health?
Their contribution margin is
Okay.
an important metric.
Despite reporting losses, their contribution margin remains strong, indicating they're keeping their variable costs per loan under control.
So they're managing costs effectively,
They are.
which is good.
That's a good sign for long-term profitability.
Exactly.
Yeah.
However, it is worth noting that their debt-to-equity ratio is currently high.
Yeah.
They're working to refinance that debt and strengthen their balance sheet, but it's something to keep in mind.
It's definitely something to monitor.
For sure.
Yeah.
Yeah, for sure. It's a balancing act. For sure. Managing growth while also making sure you're financially stable.
A delicate dance.
Yeah, exactly. So speaking of balancing acts, let's shift our focus a little bit and talk about the market's perception of Upstart. Like, how do people feel about it?
Well, the market's view of Upstart has been pretty dynamic, just like their financial performance, earnings reports, industry trends, and the broader economic climate. You know, they all contribute to how investors are feeling.
So it's a company that definitely keeps investors on their toes.
It does. Who are like the key players holding Upstart stock?
It's a mix: institutional investors, company insiders, and then just regular retail investors like you and me.
It's interesting to see that range of stakeholders.
Yeah. It is.
What does this mix tell us about the market's confidence in Upstart, would you say?
Well, the fact that institutional investors have a substantial stake
Yeah.
suggests a degree of confidence in the company's long-term prospects.
Okay.
These are sophisticated investors. You know, they do a lot of research before putting money in.
Yeah, they're not messing around.
No, they're not.
So that's a vote of confidence that probably carries some weight.
It does.
And how about the insider ownership?
Significant insider ownership is generally seen as positive. It means management's interests are aligned with those of the other shareholders.
So they have skin in the game.
Exactly.
And they're motivated to make decisions that benefit everybody.
Yeah. Ideally, everyone wins.
Before we wrap up this deep dive, let's distill everything we've learned into a clear framework for evaluating Upstart.
Okay, sounds good.
What would you say are their most compelling strengths?
Their AI-driven approach to lending really sets them apart.
Uh-huh.
Those models they use are designed to analyze so many different data points,
Yeah.
potentially leading to more nuanced and inclusive lending decisions than traditional credit scoring methods.
Yeah, that makes a lot of sense, using all that extra data.
And their high degree of automation allows them to scale operations efficiently, which is huge for growth in a competitive market.
Those technological advantages seem really significant.
They are.
What about weaknesses?
Well, their track record of profitability has been inconsistent, which raises some questions about their ability to handle economic downturns.
Okay.
And their operating costs are high, putting pressure on their margins, especially in a tough economy like we've seen.
So they need to find a way to keep those costs down while still growing the business.
It's a tough balance.
For sure. What about opportunities for future growth?
Well, they have a huge opportunity to expand into new loan types.
Okay.
Beyond just personal loans, they're already testing the waters with auto loans, HLOCs, and even those small dollar loans.
Right.
Each market has its own unique challenges, but there's definitely potential for growth there.
Yeah, lots of different directions they could go.
Absolutely. And they could also expand geographically,
Oh yeah, going to new places.
reaching new customers in different regions.
So many possibilities.
Yeah, it's an exciting time for them.
But also some threats, I imagine.
Of course, competition is fierce. You've got those established companies and also these new startups popping up all the time, all wanting that market share.
fighting for the same slice of the pie.
Exactly. And the regulatory landscape is another potential threat.
Right.
Increased scrutiny of fintech companies could lead to new rules that impact their business.
It's a lot to keep track of.
It is. It's a lot to digest.
This deep dive has been incredibly insightful, though.
I'm glad.
It's really shedding light on a company that's kind of pushing the boundaries of financial technology.
They are. They're innovators, for sure.
What do you think about the role of AI in the future of lending?
Let us know.
Head over to the comments section and let us know what you think.
We love hearing from you.